I'm Charlotte McLeod with the Investing News Network, and here today with me is Byron King. He used to write the Whiskey and Gunpowder newsletter, and now he writes the Lifetime Income Report for St. Paul Research, which is part of Agora. You can also find him contributing to investorintel.com. Byron, thank you so much for joining me online today. Great to see you.
Well, it's nice to see you, Charlotte. It's been a couple of years. We sort of, well, everybody submerged and went quiet during COVID, but so we're all getting back into the game, aren't we?
We certainly are, and we do have a lot to catch up on today. I think that one of the main things that's happened since the last time that we spoke is we now have the war going on between Russia and Ukraine. I was hoping we could start there. One thing that I think people have found interesting was that, we saw the reaction from gold initially. It has since pulled back and stopped reacting to that. So I wanted to ask if that surprised you, if that's typical, and perhaps you could also talk about where we are in this war right now, the trajectory that you see.
Okay, wow, that's a couple of questions all wrapped up in one bag there. So let's talk about gold. You would think that when a massively disruptive event like, Ukraine happens, that it would be, flight to safety. We don't like this risky thing. We're going to buy some gold. But gold has kind of, held its own, a little bumpy here and there, up, down, whatever, but it's sort of held its own. Hasn't spiked up, hasn't crashed. Many other things have crashed in the market. Many things have crashed in the market, not gold. That tells you something right there. One other angle that I want to make sure we talk about this to start off with is one of the first things that happened when Russia moved into Ukraine, special military operation and all that. Yeah, right. They rolled the tanks and out rolled the sanctions. The Western sanctions. Oh, we're mad at you. We're mad at you. We're going to take your sovereign money, and we're going to embargo you, and we're going to all these things that happened. And what did the Russian central bank do? Well, the first thing they did when the ruble started to crash, they raised interest rates to 20%. That was the central bank's way of saying our ruble is a good currency and we'll pay you 20% to hold it. So they stopped the decline of the ruble. And since that massive, almost 50% cut in the ruble value within a week or two of the war beginning, the ruble has recovered all of its currency value on trading markets as against, say, the dollar. In fact, the ruble today, in middle of May, is stronger than it was 3 months ago, just right before the war started. Okay. So another thing that the Russians did, they said, we're going to pay 5,000 rubles per gram of gold. They put sort of a floor underneath of that. Now, they've since changed the 5,000 number. They negotiate it, and they don't pay it to just anybody. They pay it to their domestic miners because it's a form of like welfare for the gold miners, which is actually not a bad idea when you get around to it, but they're still getting the gold. So by putting a ruble gold relationship into their currency, I think the Russians have created a huge downside risk for anybody who wants to trade gold down in terms of paper, below what we've seen, which is around that $1,800 level. If you're a paper gold trader, not a real gold trader, I mean, there's real gold, paper gold, but if you're a paper gold trader and you run the price down, below, let's say $1,800, you risk getting arbitraged, through the Russian gold. There's a lot of complexities. There's a lot of moving parts. You're not allowed to do business with Russia. That's okay. There's people in India, China, Turkey, they do business with Russia, so you're still going to get arbitraged. So in terms of gold, I think that the Ukraine situation and the sanctions that came out of it have created the launch pad for gold to make a rebound into maybe not exactly an international gold standard. Maybe we won't see that. It's not 1914 again, but we're going to see something like a ruble/gold relationship. And then, of course, the ruble is tied to Russia's critical exports, natural gas for sure, and coming down the line any day now, rubles for oil, rubles for everything else, copper, nickel, titanium, helium gas, neon gas, all agriculture goods, everything. So basically what we're seeing in terms of gold, what gold is telling us is that America's unipolar world, our petrodollar world, has really, kind of hit the edge of the cliff. It's not a bipolar world yet. When I say bipolar, I mean that two ways. I mean like two poles holding up the tent, but a kind of bipolar in a psychological sense too. Break out the lithium. But I think that's what gold is telling us right now. In terms of the investor out there, people who would be watching this video, is it time to buy gold? Well, I hate to sound like a broken record, using an analogy that's, 30 and 40 years old, or records, what are those? But there's never a bad time to buy gold. I mean, there is such a thing as buying it too high, but over the long term, you want to hang on. Right now, I think gold is, gold is fairly priced. It could drop in the event of a major market meltdown, because people won't be able to sell XYZ stocks over here. They'll be going no bid, but they do have to somehow raise some cash to meet their margin calls. So what do you sell when you have to raise cash in a hurry? You sell your gold, because there's always a market for that. Some Chinese guy, some Indian guy, some Turkish guy, some Russian, they're always going to buy your gold. They're going to, okay, here's your check. Here, take these dollars and go, pay your margin call with it. So that answers that. I could go on, but you probably have other questions that you would like to ask, because your first question was like 5 questions, and I think I really wrestled with maybe just 1 or 1.5 of them.
No, sorry to dump all the questions on you at once.
No,
It's just me being
no,
excited.
we could talk about it all day. It's that deep and that interesting. Yeah. Yeah, go
It
ahead.
really is. And one thing that I want to pull out of what you've just been saying is, this idea of a gold standard. So you've explained how that could work in relation to Russia and the ruble. Can you talk a little bit more about how that relates to the rest of the world? Because I know this is a topic that our audience gets really excited about.
Mhm. Well, when people talk about the gold standard, I mean, people who have much of a sense of it at all, again, they revert back to 1914 and in the 1800s, back to the end of the Napoleonic Wars. I mean, from about the 1818 or 19 or something, the world kind of went on a British gold standard, but it was everybody's gold standard, and that lasted for a century. And that was part of Europe's rise to power and what have you, the industrialization of Europe. I mean, they had gold, but also they had the Industrial Revolution that went parallel with it. So it's one thing to say, oh, I've got lots of gold, I'm rich. Well, you might have a lot of gold, but that gold can be just as much an anchor as a source of wealth if you can't do anything with it. Because if you want to be truly rich, you got to have the gold, but you have to have the steel mills, and you have to have the coal mines and the oil wells and the nuclear power plants and the manufacturing, and you have to have an education system that feeds people into it. And you look around and you say, well, gee, what countries in the world are doing things like that? Well, look at what country has spent the last 40 years building, steel mills and power plants and educating its citizens to very high, China, obviously. Look, are there any other countries that, that have lots of industry and smart? Yeah, there's this country called Russia, and I know that right now it's very popular to beat up on Russia as, oh, they're bad, they're terrible. I mean, the war is a terrible matter. I mean, I don't want to go there. I don't want to. It never should have happened. There's a lot of diplomacy that never happened that could have prevented it. There's a lot of reasons why we're there. We're not going to talk. We're not going to just beat up on Russia and Russians in general. I mean, in a way, we're going to compliment them and say they're a country that's full of smart people. I mean, they graduate a lot of PhD physicists. They love math. They're good at chess. They have, they produce with a population of about 140 million. They produce as much steel every year as the United States with a population of 330 million. They have an aerospace industry. They produce good equipment. High tech. Their rockets launched American astronauts up to the space station for the last 12 years. Don't write these people off, and all the propaganda that you hear about, oh, the Russians, they don't know what they're doing in Ukraine. Their tanks are blowing up and their equipment doesn't work. And that's what you're seeing in the news media. That's not exactly what's going on out in the field. Not that anybody who isn't out in the field really knows what's going on out in the field, but you need to understand that, when you pick up the news and it's all, this is how many tanks the Ukrainians blew up, and this is how many jets they shot down, and this is how many rocket launchers they destroyed, and all that stuff. yeah, you're getting one angle to it. We're going to wake up, in the next, let's say 2 months, by, let's say, the middle of the summer, middle of July, end of July, we're going to wake up and that war is pretty much going to be over. Special military operation going to be over. Um, Russia is going to have a big whack of Ukraine. They're going to keep Crimea. Who knows if they're going to get, Odessa on the Black Sea. But they're going to get the Russian-speaking parts that they wanted. They're going to get the industrial parts that are still fairly well integrated with the Russian economy. They're going to get their land bridge to Crimea. And it just so happens, isn't this amazing, that much of that territory that the Russians are going to wind up with after the map is redrawn are rich in coal, iron ore. And if you drill deep, natural gas and oil, I mean, there are several natural gas and oil basins in the northern Black Sea, which used to be, quote, Ukrainian, but now, now they're going to fall under Russian domination. The West is going to scream and complain about it. And it's not necessarily just Byron saying this. I mean, no less than Henry Kissinger said this the other day in Davos. He said that, there needs to be a settlement of this war, and Ukraine is going to have to cede territory to Russia. I mention all of that, again, not to get into the details of the operation, but to make the point, when this thing starts to wind down, much of the tumult that we're experiencing right now is also going to wind down with it. It's not going to go away, but in order to settle the war, in order to, come to a ceasefire, an armistice, whatever you want to call it, a North Korea, South Korea situation, whatever you want to call it, call it anything you want. But in order to bring these horrible hostilities to an end, there's going to have to be some deals, a whole lot of deals, painful deals. It's going to be like swallowing poison to make some of these deals. A lot of bitterness and a lot of pain. But part of that is going to be that Western sanctions on Russian people, Russian businesses, Russian government, other Russian entities, those sanctions are going to start to relax. And that is actually a hopeful sign. Because one of the problems right now, high oil prices, high natural gas prices, high food prices, high fertilizer prices, high lumber prices, you name it, high copper prices. It's because Russia is what you might call the marginal producer of a lot of important stuff that makes the world work. And if you remember back in economics class, and this is basic economics. I don't care where you went to school. If you took even this much of an economics course, you learned somewhere that the price of everything is set at the margin, right? I mean, we see it in the stock market every day. A share of stock sells for $100. Does that mean every share of stock sells? Well, no, but that means that this particular trade went for $100. And so you multiply that by the shares outstanding and, there's your market cap. Well, when somebody says a barrel of oil is, $100, $105, $110, why is that? Well, it's because somebody over there is willing to pay $110 for that barrel of oil. Right now, with a lot of Russian oil, Russian natural gas, Russian everything else, difficult to get to. You can still buy it. It's just hard to get to. It's as if it's pulled back from the market, and so the marginal producer isn't out there selling into the world market. There's a lot of arbitrage going on. There are Indian oil traders buying tankers full of Russian oil at $70 a barrel, and they're sailing it out. And they do cute things. They park that tanker next to another tanker, and they pump half the oil from this tanker into that tanker, which is maybe half full of Nigerian oil. So you mix the Russian and the Nigerian oil. Now it's not Russian oil anymore, and you can go sell it. You can go sell that $70 oil for $100, and you just made $30 a barrel. So somebody's getting the arbitrage on it. Maybe not the Russians, but somebody's getting the arbitrage, and that oil is still out there. It's just harder to get to. It has more frequent flyer miles, you might say, more sailing miles, where the tankers have to go, the long circuitous routes they meet out in the middle of the ocean. And this is all, if you follow the shipping industry, I mean, this is just basic, shipping 101. It's happening all the time. So there's, again, there's another element of, we can call it hope if you want to call it hope, but it's just sort of it's my prediction of what is going to happen in the next couple of months. and in many respects, to the extent that Western markets are dropping like stones, but Dow is down, Nasdaq is down, S&P is down. Um, all I can say is if you're a if you're a natural resource investor, you're probably slightly happier than if you've been investing in all the social media and all these so-called tech companies. And certainly, I mean, crypto has just erupted. Crypto has just I mean, it has just gone. It's gone supernova in terms of just ripping itself apart. I mean, some of these crypto downfalls are just legendary, epic. But if you're in the natural resource business, yeah, you're down. You're probably down. Although a couple of companies are up, but you're not down as much. And at the end of the day, excuse me, you might be down with a company, but guess what? If that company has some of this, this nice native copper right here, this happens to come from the Keweenaw Peninsula of Michigan. It's classic copper, locale. But if your company has some of this great copper, or any of many, many other things, if you've got gold, silver, copper, lead, zinc, rare earths, what have you, at least you've got something. Whereas if you have crypto, what do you got? You got a bunch of numbers that were cranked by a computer. And if you have, social media, that was the business model was that we're going to capture all the advertising revenue that used to go to newspapers and magazines. We're going to run it through our little system, and then we're going to have some, multi-billion dollar market cap in this price earnings ratio that's like up in the stratosphere. Now, you're kind of getting what you were always going to get, which is a rude lesson. What comes after the rude lesson? I don't know, hopefully wisdom. Wisdom may come late, but it seldom never comes. Martin Luther King said that. He probably borrowed it from somebody else, but I remember Martin Luther King saying that.
Okay. So lots of great comments in there. And I think that what you've been saying ties into another question that I had, which was about security of supply. And this is a topic that we've touched on together over the years when it comes to rare earths. But the war really seems to have put energy supply security into focus. So you're speaking about the war winding down, maybe the sanctions pulled back. So at that point, do these energy supply security concerns decrease, or is that still going to be something that we remember we need to deal with this?
Oh, we'd better remember this, and we'd better remember it good and hard. The supply concerns that we have now are going to transform. They're not going to go away. I like to think of the Ukraine situation as Pandora's box. Ukraine has opened the box, and all these bad things are coming out of the box. The thing is, there was already a box, and that box was full of bad things. And this just happens to be the big event that opened the lid. Could have been something else, but it wasn't. It was this, just whatever the accident of history was. The muses of history are playing games with us. But what we see with energy situation, for example, let's start with energy. I love energy. I'm an old petroleum geologist from way back. That it's a very capital intensive, long-term, continuous effort, to explore, acquire the land, explore some more, develop, invent the technology to develop, and then finally, sometimes years later, you lift that oil and bring it in. The oil situation in the world, and I'll stick to petroleum right now. We'll talk about natural gas in a minute. The petroleum situation in the world is really suffering from long-term underinvestment in exploration, development, technology, et cetera. And add in all the other things, resource nationalism, access to areas, definitely a headbutt against a global, well, I won't say global, well, it is global in the sense that like air is global, but it's more of a Western mindset that is putting climate change up here over, the development and the continuous development of the energy system that supports the whole situation. I've heard people say things like, well, the energy sector is only, pick a number, 9% of GDP. To which I say, okay, try running the other 94% without it. I mean, you take away the basic energy. I mean, there's no airlines, there's no cars, there's no travel. There's no, there's no lights. There's no plastics industry. You take away petrochemicals. There's no agriculture. There's no food. There's no refrigerator to put the food. I mean, we could go down that. We could go down that route. In fact, do a plug here. Vaclav Smil, How the World Really Works. There you go. Okay, all you people out there, get this book. Get this book. Read this book. Okay. I mean, he has about 25 other books. They're all good. Read this one. Just came out, a couple months ago. Fabulous book. Go plug for Smil. So we're looking at decades of underinvestment in energy in itself. I said I'd mention natural gas separately. It's something the same with natural gas, but it's the same, but it's different. The North America is natural gas rich, basically because of fracking, and Russia is natural gas rich because it's Russia. Much of the rest of the world, of the gas using world, is really on the hook here. Europe was for decades importing pipeline gas from Russia, but Ukraine has brought that to a fairly abrupt halt. This idea that we don't want to be importing that Russian pipeline gas anymore. Oh, okay, what do you want to do? Well, we're going to import LNG, liquefied natural gas, LNG. We're going to import that, and we got the Americans on our side saying, "Oh yeah, we can do that." And and we got entire industry and entire lobbying groups and entire political blocs saying, "Yeah, we're gonna drill that gas and we're gonna LNG it and put it on tankers and send it over there." But then you have to do some math. I mean, how much gas are we actually talking about? What does it take to run Europe? Every day, and not just in summer, but in the winter too, because it's cold and dark in Europe in the winter. It takes a lot of gas here in the United States, more than we're producing right now. There are people who say, well, we can produce more, to which I say, yeah, good luck. We don't have enough drill rigs. We don't have enough drillers. We don't have enough drill pipe. We don't have enough drill bits to do what you say you want to do. Then we have to pipe it to an LNG facility. Well, how many of those are there? Not enough. Then you have to LNG it, which is an energy intensive process. Then you have to put on LNG tankers, and there's not enough of those. Then you have to send them over. And there's this idea that somehow North America, meaning the US, is going to have this Berlin airlift, except it's going to be a sea lift of natural gas. Instead of airplanes flying cold to Berlin, like in the 1940s, we're going to have LNG ships hauling LNG over Europe and discharging it at many facilities that haven't been built yet. I mean, Germany has like none, and they're well, we're going to build 3 or 4 in the next couple of years. Okay, let's do that math. How long are the next couple of years? Let's do some math here. We're talking 36 months, 48 months. What big project ever gets built in 48 months? I mean, I've got the Manhattan Project in World War II, I suppose, but but we're not there. We're not that. That's not this. So again, we're looking at decades of underinvestment, and that's just in energy. Now we get to other things. How about ag and fertilizer? Well, ag is what it is. The soil is what it is. But I mean, a lot of people out there watching this are probably pretty savvy. I mean, when I say, I don't think I have to get into the details of, we don't really eat food. We eat like engineered energy, and we eat engineered third level products. I mean, what is it that makes corn grow in the in the amber grain fields of grain and all that stuff? What is it that makes that work? Well, a whole lot of in North America, genetically modified seed. Okay, a whole lot of fertilizer, a whole lot of pumped irrigation in many areas, which that's energy, lifting water from hundreds of feet and pumping it, over thousands of acres. A whole lot of herbicide, pesticide, a whole lot of tractor fuel to plow the land and sow the seed and do the harvest. And a whole lot of propane to dry the grain. I mean, so when you eat that loaf of bread from the French bakery, oh boy, that bread tastes great. Yeah, that bread tastes great, but to get that bread to your table, took a lot of energy and a lot of chemicals, you know. And I mean, there's an entire petrochemical industry behind that bread, you know. I hope that doesn't, you know, ruin anybody's appetite for dinner or whatever. But you know, just telling. And we could look at anything you want, you know. I mean, at beef, we could look at, you know, farmed fish. We could look anything you want, right? Yeah, apples, fruit, vegetables. You know, I mean, the 2,500-mile Caesar salad. You know, the lettuce from California, you know, is trucked all the way across the country to, you know, Pennsylvania, and we buy it at the supermarket. And oh, what a delicious salad! Yeah, but you know, you didn't grow that lettuce. That lettuce grew in some field, you know, out in the Imperial Valley somewhere. You know, so again, you know, when we talk about shortages, it's underinvestment. I mean, I mean, look at like baby food. You know, it's the big baby formula, you know, crisis that we have now, and it's true. It's a crisis. I have my nephew and his wife have a baby and two other twins just born, like Irish triplets. You might say. I don't know if I'm allowed to say that. You can excise that from the tape, but they need baby formula. I mean, my wife and I, we were running around buying a can here and a can there and mailing it down to them, you know, in North Carolina, just so they'd have baby formula. I mean, that's a problem. What kind of developed country doesn't have a baby formula, you know, system that keeps the shelves full? I'll tell you what kind of country, a country that is underinvested in important things. And it could be baby food now, but it's going to be electricity over the summer. If we have a hot summer and everybody turns on their air conditioners at the same time, we don't have enough power plants. And those power plants, you know, they're not generating enough electricity. We don't have enough grid. We don't have enough substations. We don't have enough, you know, command and control of distributing and wheeling the power to make it all work. So all the forecasts are for, you know, brownouts and blackouts this summer. You know, good luck. Again, it gets back to underinvestment. And that brings us back to Pandora's box. You know, that Ukraine just opened the box. The bad stuff was already in there. You know, people had been, you know, we had a bad energy situation and a bad, you know, food situation, you know, bad baby food situation, you know, you name it. There was not enough, you know, just not enough investment over the years. Bad tax system, bad political system, over regulation. You know, we can go down the whole litany of, you know, gee, how come we have these problems? Well, people write books on this stuff. I have a whole bunch of them, you know, in my office here, and you know, sometimes I even read them. But yeah, so but yeah, I hope that gives you some food for thought there.
It does. And I think the last thing that I'll ask you is, I think that, you know, people seeing what's going on in the market right now, maybe looking at their portfolios, thinking like, oh my goodness, what do I do? From
Mhm.
speaking with you, it sounds like there really are quite a lot of options. You could go for safety and gold and precious metals. You could look at these longer term trends like energy.
Mhm.
So what would your best advice be for investors during this time?
Um, if you were not foresighted enough to sell everything, you know, 3 and 4 months ago and go to cash and just, you know, just delete every app on your phone or on your about, you know, looking at the market. If you did that, then you're fine. Don't worry about it. If you've been watching, you know, your shares do this, your 401k do this, your, you know, all, you know, you are worried, and you are right to be worried, and you've got to be asking yourself, I mean, what the hell, how do we get out of this? Um, I mean, is the Federal Reserve going to raise interest rates? Yeah, some more. I mean, a whole lot. I doubt it. They don't have the guts to raise interest rates to where they ought to be. Um, I would stay away from a lot of these conventional, you know, things, you know, the technology, so-called tech. I mean, a lot of that tech is just, you know, fancy computer apps and stuff like that. I mean, I always thought real tech is like, you know, like building nuclear submarines. That's tech, you know, special kind of tech. But you know, people who know a lot about nuclear submarines don't talk about it. But you know, but yeah, that's real tech. You know, the as far as like what I do, what I cover in my newsletters, and I mean, I'm an energy guy and I'm a mines and minerals guy. You know, I know there are ideas out there that are good ideas in medical, in you know, in robotics, in, you know, things that are going to do very well in the years to come. I'm not your guy for that, okay? But in terms of energy, yeah, I mean, basic oil, basic gas, oil services, the usual litany, Schlumberger, Halliburton, Baker Hughes, those guys. I do think that, I mean, that if you really, really, really want to go bottom fishing in the energy sector, one of the last places that hasn't been overly bid up is the offshore sector, the offshore drillers. Because, I mean, the Biden administration just hates them, but at some point, things might get bad enough that the Biden administration is going to have to flip on that. In terms of everybody else, excuse me, the big guys, the Exxons and the Chevrons, whatever, they're big and they're good and they pay a dividend. They're already bid up pretty high. It is a stock picker's market, but if you don't want to pick stocks, I mean, there are funds out there that have already picked them and they do the professional management. Is energy going to get cheaper? I mean, even if the war stopped, tomorrow, there's enough built-in problems in the global energy system that's not going to resolve quickly. I mean, I think, if you're paying $5 a gallon for gasoline in the US now, and I was in Vancouver not too long ago, you were paying $2.30 per liter. So that's about $9. Then adjust for the Canadian. I don't know, that's about almost $8 US a gallon for that. So if you're paying $5 in the US, paying $8 in Canada for a gallon of gas, and you're paying $7 a gallon in California. So don't count on going back to the good old days of like a year and a half ago. That's not going to happen. So energy is a good place to be. Meanwhile, the gold sector, the precious metal sector, has been badly beaten up by the market. I think there are plenty of nice pickings out there. I don't know that you want to go in there and spend everything, put every dime you have into an array of stocks, tomorrow or the next day. No, you just kind of want to buy selectively. Stock picking. I follow a lot of small Canadian juniors. I've got some Yukon names that I've covered, that I've mentioned. I've got some U.S. names in Montana and Nevada, Mexican names, a couple in South America. Get into some really iffy politics down there, but there is no substitute for good geology, meaning mineralized rocks, if not ore in the ground, if not a reserve estimate, and management that knows what to do with it. Some of my writing in Investor Intel, for example, investorintel.com, you can see me, you can watch me doing interviews with rare earth people and gold mining people, copper mining people, good companies. I don't do interviews with crummy companies, So I'm not gonna lay names on the table right here. I'm just gonna say that if you go to Investor Intel and you look at the list, you'll see some interviews that are out there at no cost to you, with some companies, and those are some great names. And plus, I've got a couple of articles that I've written again where I list names, from the Yukon to Sonora, Mexico, and Nevada, Montana, British Columbia. So there's a lot of nice companies out there that have been beaten down. Do they have further to drop? Yeah, who knows? I mean, next couple of months, anything could happen. But do they have good rocks? Yes. Do they have, are they nice mineralized ore bodies? Yeah. Is it stuff people need? Well, copper, nickel, cobalt, rare earths, platinum group metals, gold, silver. Yeah, it's stuff people need. And on the other side of all this, when the world starts to dig itself out of the hole and starts to and realizes that if we collectively want to keep a standard of living, or even if you're really cynical, even if just those elite up there at the very top, those rent-seeking, blood-sucking, what's who are just grinding the faces of the working class. They've killed off the working class, and they are sucking the blood out of the middle class, and they're coming next for the professional class. The doctors and the lawyers and the accountants. They're coming for you in your leafy suburbs. They're coming after you. Even if you believe all that, these guys are still going to need the copper and the nickel and everything else. So I do think that there's a lot of upside in the mining industry when some of the risk of day-to-day issues starts to go away.
Okay, well, that was great. I think you helped us understand a lot about what's going on in the market right now. So thank you for coming on to talk about all these topics.
Well, it's a pleasure to speak with you. We haven't talked in a while.
Yeah.
Whole COVID thing, but we move on. Move on.
Well, and
Yeah. Well,
of
thank you,
course,
and to everybody out there who's watching. Again, if you want to play the game, it's risky, and it's a serious roller coaster. But I do think there's a lot of money to be made on the upside, certainly in energy and mines, minerals, and materials.
all right, I think that's a good place to wrap it up.
Mhm.
Once again, I'm Charlotte McLeod with the Investing News Network, and this is Byron King.